Hey, what's going on, guys? This is Terrence Ray back at you with a weekend stock market update. I've been anxious to do this video uh, all weekend, to be honest with you, because we're gonna have some fireworks this week, so I'm here to walk you through it. So without further ado, let's get right to it. All right, let's see. We're gonna move in. We're gonna start with the SPX and the expected move, hide these indicators, and then 'cause this is what I like to do before the week. And if you've been following the channel, you'll know why. Take a look at the screen, and I have the expected move where you can see it, and then I get that from the option chain. I go so like on Sundays, or let's say the market's not open on Monday, and I come in on Monday and I go for that Friday. So this expiration right here, this option expiration, March 14th, that means this contract expires on Friday. I get the expected move for it. So for the week, we have an expected move of $147.72. I think last week it may have been like 110, 117, something like that. I can't remember. But this is one of the largest ones that I've seen probably in the past few years. Honestly, I don't recall one being this much. So that what that's telling us is that the markets they're predicting large moves this week, very large moves. Doesn't tell us the direction, just tell us that we can get a big move to the downside, right? We can get a big move to the upside, or we can get both. We get something here, boom, boom. You can get a lot. So be prepared to be whipsawed around if you're doing any day trading. I'd be careful and I keep my size small. So that's what that tells us. Now let's go take a look at some economic indicators. Now I come to trading view. So right here I got trading view pulled up. And for the week, we got some news. We got ISM manufacturing PMI. We have we don't have anything Tuesday. Wednesday we got ISM services PMI. If you click on this little drop down, it'll tell you what it is. The non-manufacturing ISM report on business is based on data compiled, blah, 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 blah. It'll tell you what it is. Friday, we have non-farm payroll. We have the unemployment rate is going to come out. And then at 12:30, Fed Chair Powell is going to be speaking. Now, I'm not a real big news guy. I just want to know that there is news. So like you'll know why. So that explains why the expected move is so high. That coupled with all the politics surrounding the presidency, geopolitics, and so forth. Now, if you were to dig into, now there are people who dig into these numbers and they'll come in and look at this and come look at the non-farm payroll and they'll come look at the unemployment rate. We already know that volatility is going to be pretty high this week and that we can expect large moves by looking at the expected move. I just come in here to just show you guys why, but it's already priced in the market. So those moves, this is all of this, right? I already knew that something was going to happen this week, right? Or it's expected to happen, right? And I already knew that by coming here. This told me this range right here is telling me like, hey, we're gonna get a lot of whatever this week. What it is not important to me. Just knowing that it's gonna be there. Now I know how to plot my week out. Um, as far as like trading, my size and things of that nature. Now let's go look at the SPY, which is the ETF of the S&P 500, and we're gonna put the indicators on, and I could just kind of show you guys. I'll try to put them back on. There we go. Now, after this move that we see, right, we can see that from here to here we got this very large move. But basically from what date is that? February 19th. We've been in a spiral to the downside for the past few weeks. And we got we got 1, 2, 3 green days in there. but then the very next day they just sell them back down. So as an experienced trader, if you're an experienced trader, you may do some counter trend stuff, which is what I did on Friday. I'm going to show you the trade. This right here is the 9-day moving average. Generally, if you're below it, you want to stay short, right? And you may say, I got bullish. And because I did, I'm just saying that the market is stretched out. So at some point, we're going to get a little pop. And we did on Friday. And all I did was I came in, I sold a put spread, right? So this went $5 wide, came out here and bought this, bought a wing. So it's $5 wide. The most I can lose is 500 bucks. Now, if I hadn't to put this wing on, then you're not capping it. It would be like a naked put. And you can see we come in here, it's like up like only like $23 because the market popped a little bit. If we get a larger move on Monday or later on that week, then I may be able to take this off of, 60, 70 buck winner. These are small trades. This account is a small account. This is, so these trades can be done in pretty much any size account. Now, also, what I want to look at, let's go look at the Qs because you can see here is the S&P 500. Let's go look at the NASDAQ, which represented by the triple Qs. It looks similar, right? One thing also I want to take note of is over here. I don't know if you guys can see it if you're looking on the phone. You'll see it's green right here. This is my stochastic. So I had a stochastic up, just letting me know that, hey, it's oversold on my stochastic. Green, just saying green because, like, hey, it's a buy zone. Now, you may say, man, this with all this down movement, for the most part, I'm a contrarian. I like to play the other side of the market. I will do some trend trading stuff too, but sometimes I like to go against the trend. So this is trending down. And if you trade this area down here, you're just looking for a quick pop, right? The RSI is at 35. So you can go a little bit further on the RSI. Okay, you can see right here, it just has a 35. But generally I tend to lean on the daily, I lean toward the stochastic. And on the hourly, I look more at the RSI. So you can see where we at. The MACD is stretched out. So I expect to see somewhat of a pop, maybe Monday or Tuesday. And then maybe we can get some more downward action. It's possible. Let's go look at IWM. Now the IWM is leading both mark out of all of them. The IWM is down the most. These are your small caps. You had this big down move, then you had to consolidate and go sideways, and then you had to come down some more. And you can see the MACD is still making on the moving averages down here is lower. We are make no mistake about it. We are in a full blown like down market, right? Or bearish market. That doesn't bearish markets with my, recently don't last long. You get a little bit of a correction like something like this, and then the market will find a low and then it start back going up again. If we took this chart and zoomed out, let's go 3 years. You see, you generally get something like this, then you get a little sell off. I don't remember this is a 3-year chart. So whatever this was back here, I guarantee you people was like, oh man, what's going on? It did that and then marched up higher, marched up higher. So this is a nice correction that's needed. I do have levels on the IWM. On the IWM, if you can see those levels, you can see right here is one level, and you can see it is holding. I'll try to darken this up so you guys can see it. You can see it right here. This level is holding right here. Let's take this off. Make it easy to see. All right. Here's a level right here, right around, we'll call it 204. And then the next one down is going to be right around, we'll call it 195. And then area or the reversal zone, I like to call it, is right between 190 and 186, right down here. So it can still go a little further down, but like I said, I expect to get a little pop this week. The market generally, you know, the market, like they say, you take the elevator up or you take the stairs up, stair steps up, and the elevator down. So the market kind of goes fast to the downside. Then we'll make that bottom, and then we'll start. People will come in and they'll start buying it up. At least that's what I think, anyway. Let's go look at. We'll look at Apple. Apple is one of the stocks that I'm drawing up. You see this pattern in here? I'll remove these indicators, make it easier to see. See that? Got a little triangle right here working. Now, it can continue to do this and go sideways and then explode out of here. Generally, what happens is kind of like a coiled spring. The stock will go, it'll bounce back and forth, back and forth, back and forth, and then we'll get a big. I have no idea which way it's going to go. It'll probably be some type of news that'll come along and bring it out of here. If I had to bet, if I was a betting man, and you guys know my saying, if I was a betting man, and I am a betting man, I would bet on it to go to the upside. We'll see. I would One way how we could play it is we could let it break out of one of these trend lines, come back and retest, and then go higher. Same thing to the downside. You could wait, let it break out, retest, and then go lower. Right? You can play it either way. That's one of the ways to play it coming out of there. You could wait, or you can do something like option wise. You don't know how long it's gonna sit in here though. And the IV rank is pretty high. I was gonna say you could do something like maybe, buying the straddle. You can come up here, click on straddle, long, click on long, and click go, and you could buy that straddle. So with buying that straddle, you're paying $1,715, and you're betting that Apple is gonna break out of this range and go and make a big move. It doesn't matter to you which one. If it goes to the downside, you need it to go past 225. If it goes to the upside, you need it to go past 250, 257, something like that. You need it to basically go outside of the expected move. So this expected move is about, we'll call it $15. You need it to go past $15 to the downside, past $15 to the upside to make you some money in Apple. That's if you buy the straddle. So this would be basically a delta neutral trade, and you're just betting on a big move either way. As opposed to what I normally do, me, is selling the expected move, coming out here like that and betting that the market will stay in here. I wouldn't do that on this particular trade. And one of the reasons why I wouldn't do it on this particular trade is because the market is doing like this, right? So at some point, we're going to get a big move either way, right? Let's go take a look at Amazon. Amazon is sold off pretty good. We got a nice move to the downside, a correction of this move from here, right? We got this move here all the way up, and then we got a correction right here. So at some point, you can see this long doji, that long wick right there, just hit a support level right here. We'll go over, take a look at this support level right there, and it found support right here at this gap, which the market generally does. Now, do we get a little pop? I predict we'll get something up into here, get back up around this 9 day, maybe even go up some. But it's a great possibility that the market then sells off some more. It's possible. I could definitely see it the way that looking at the structure of this. I expect us to get some chop in here before we get a move either way, right? Let's go. I'm gonna take a look at what would look at Boeing. You can see Boeing came all the way up here, hit one of my levels, hit them all really, and then just sold off. It's just a classic correction in the market going on right now. Caterpillar, look at Caterpillar, nice downward move. So, with that being said, guys, this week in the market, I will play it safe. If you're an experienced option trader, I think selling premium, meaning selling options, you got a lot of vol in the market. I would be selling stuff. Strangles, let's say something like I wouldn't do it in Apple, something maybe like Caterpillar. After you get a big move like this, and it actually look at this candlestick right here. So like this doji candlestick, and they got 1, 2, 3. So you want to see a little pullback into here. If Caterpillar is going to go up, you want to see a pullback and then go higher. But I think we might see some chop this week. See some big moves, but it may be at the end of the week, you may not get a whole lot of nothing. Meaning, so you get something here, Monday, you get some news, then here, then by the end of the week, it's just did a whole lot of this. Possible, right? Let me know what you guys hit the like button, hit the subscribe button. Let me know what you think. Um, I'm going to make another video and post it in the members. For my members, I show you guys. I got this week. I got like 2 stocks I'm watching. I got levels for them. And I'm gonna be going over those 2 stocks for the members. So if you're a member, just wait a little bit. I'm gonna drop this video, then get to started on my members videos. So those are a little bit more detailed with scans that I run for the members that um, just take a little bit more work for me to do, but I do that for the members so that you know exactly what the stocks that in particular that I'm looking at soon as that bell ring on Monday morning. With that being said, guys, I'm out. Peace.